Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook.
My name is Marcus Ogden, the owner of Ogden Ventures, LLC, a speaking, coaching, consulting business that helps real estate investors rise and elevate to the next level. We are a proud sponsor of the Passive Investors Playbook, a show that helps individuals learn about real estate investing, knowledge to help them gain wealth in investing in real estate to grow their portfolio. To contact Ogden Ventures LLC, go to our website, www.marcus.ogden.com, or email us at marcus@marcusogden.com. Get in touch with us today. We'd love to speak with you. And again, we are a proud sponsor of the Passive Investors Playbook Show, a show that helps people understand and gain knowledge around real estate investing.
All right. Thank you for tuning in today. My name is Charlie Hardage, and I'm the host of the Passive Investors Playbook. Our show is focused on people that were successful in their careers prior to getting into real estate. Today, I have the pleasure and honor of speaking with Dr. Tudor Francu. Dr. Francu is a serial entrepreneur, anesthesiologist, and real estate investor. He is the CEO and founder of Stellar Multifamily Enterprise. Dr. Francu resides in Maryland, but is originally from Romania. He moved to the United States at age 28 to finish residency in New York. He got his start investing in real estate over 20 years ago after meeting Robert Kiyosaki. In 2019, he started passively investing in multifamily syndications. He has since become a general partner in over 700 units. His entire real estate portfolio consists of over 5,000 doors. Dr. Francu, thank you so much for being on the show today. I'm excited to have you. Can you tell us a little bit about yourself?
Sure. Thank you, Charlie. Thanks for having me. It's a pleasure to talk to you again, and I'm sure your listeners will probably benefit from our discussion and hopefully take some insights for real estate journey.
Absolutely.
A little bit about myself. I am a medical doctor. I practice anesthesiology. I have two medical groups right now that I'm coordinating and managing. We're serving surgical centers mostly in Maryland. And I also started my real estate investing journey years and years ago with single family homes for rentals, and then progress from there, scaling up to multifamily units and apartment complexes.
Awesome. Thank you for sharing. What I really love about kind of your bio and how you got started is after meeting Robert Kiyosaki. I think, you know, everyone now has probably heard of Rich Dad, Poor Dad. But you talked to him over 20 years ago, and I don't think he was nearly as big as he is today. How did you meet him?
It's a funny story, and you know, I'm happy, and I was very honored that, you know, years after I met him, you know, we end up doing I end up doing real estate the way he thought at that time. It was in the beginning. He was doing his own seminars with his wife on stage, and I got to attend one of those seminars. It was, you know, a pretty small one. He was just starting to promote his book, Rich Dad, Poor Dad, which, you know, probably know. It was written not intentionally. It was written as a basically an addition to promote his cash flow game.
Yep.
So, and it became a bestseller. And I read the book and I was like, I need to know this guy in person. It kind of opened up my mind, and I attended his seminar and met him in person. You know, it was one of those times then that he was give autographs on his book, and you can chat with him a little bit. And it was very transformational for me at that time. And came home and put up a plan to start investing at that time. And, you know, we're talking 22 years later with this amount of investing that I've done over the years, and I can thank him enough for his influence at that time.
Wow, that's amazing. I actually, probably 10 years ago, I went to a Rich Dad, Poor Dad seminar. But this is long after he hasn't been doing them for a while.
Yeah.
He's on to much bigger and better things. I did not meet him, but that's fascinating. What about the book or maybe the seminar? What turned you on to just real estate in general?
I think the basic principle he thought at that time was, like in his book, that the 4 different quadrants that you can place yourself in. Yeah. And at that time, I was fresh out of the residency. I was an employee of a private practice group. And obviously, I didn't know about the other quadrants. And when he explained the whole principle that he had in mind with how you can transition from one to another over the years and become an investor, it was mind-blowing for me at that time. And I put myself in a position of finding solutions, how to transition from one quadrant to another. It's easy to stay in your comfort zone usually. And, being a high-paid employee at that time, I didn't have any reason to move anywhere in another quadrant. But the way he explained the whole process makes you think that, there are much better things that are out there that you don't know. You don't know what you don't know, right? So, that was for me the kind of the click of the whole meeting.
Yeah, the quadrant, I think for me as well, and probably for many of the listeners, was very eye-opening. It talks about, if you're not familiar with it, talks about the employee. You have a job, you trade your time for money. And then the next step is the self-employed, then a business owner, and then the investor. And it's very, like I said, very eye-opening for a lot of people, because I think, most of us, at least I was raised with, become an employee, get a very good education so you can be a very good employee. That way you can get raises and, move up the org chart. And I think what in Rich Dad, Poor Dad, if you're not familiar with the book, pause the podcast, go listen, go read it right now. It will absolutely change your mind and your mindset. And I related a lot to the poor dad. My dad was very well educated, invest everything you can into the stocks and mutual funds. And I think that may have worked back in the day, but that doesn't work now. And so, it's awesome. It's amazing that you got to meet him, and that book changed your life probably as much as it changed my life, and really opened my eyes to
I think one of the, I'm thinking retroactively right now of how I was at that time. And, as you said, I came in the United States when I was 28 years old. I didn't know anything about any kind of financial system that was here. I didn't know how to use a credit card. What's a debit card? I didn't have that kind of exposure in communist Romania. So I came here freshly empty, financial head, basically. So whatever I got my hands on, books and self-taught books and financial information, I read all the time. And so for me, this approach and the chance that I had to meet him right, after I came in the United States, it was very beneficial because I didn't have to convert any kind of old patterns that I had. Like the school system is in the United States here and in general in the world, they don't teach any financial information. So they leave you after you finish high school. Basically, nobody knows how to balance a checkbook because there's no information, right? Taught in schools. So for me, it was just an approach of how can I learn this subject from one of the best? Every single information that he was teaching at that time, it was like fresh out of my head, and I didn't have to go back to anything from previous years. So it was I started off right away with that kind of concept of evolving from an employee financial situation to a self-employed. In a few years, I started my own companies, and then to a business owner, which I evolved over the years, and now I end up being a real estate investor.
That's fascinating because I think, and myself included, you went up that chart, the employee to investor, relatively quickly. And you touched on something a few minutes ago about your comfort zone. And I'd love to dig into that because I know myself and a lot of other people that I talk to, they're kind of worried about taking the next step. There's a lot of risk involved, or so people think. But there's a lot of risk involved with maybe starting your own business, maybe starting to invest, or, they're very comfortable trading their time for money, being an employee, and they're not comfortable taking risk. I think something that you said was you didn't really have to unlearn anything. You just kind of made that quick transition. Do you have advice maybe on for others trying to take that step on maybe what you could do to
look, I think you're talking to a person who took life in full speed basically at 28. I left my country, my original country, with one luggage, and I booked a flight to a strange over the ocean place that I didn't know anybody, barely know English. So for me, an answer to this comfort zone question is very easy. I don't have a comfort zone. I don't like comfort zones. All my life, I was out of my comfort zones. And this is where the progress happens, because you will never stay, if you stay in your comfort zone, you'll never progress to whatever you want to do. For me, it's an easy answer because I took whatever risk I had to take all over my life. And, I'm still somewhere in my comfort zone right now that I don't realize. And I'm sure, going to places and masterminds and meeting people that are better than you, and they have a better vision and a better perspective than you, like Tony Robbins, like Grant Cardone, people that are thinking bigger than you. That's how you're going to get out of your comfort zone, because we all think that, I've done enough maybe by this time, but it never ends. The learning process, the progress never ends. And that's the whole thing. It's a journey. Life is a journey. We don't have a, end point to it. We don't get to a point and said, I'm going to stop here because this is my comfort zone. If you do that, you will, basically go back or die at that point. You have to progress. You have to grow. You either grow or you die. That's the bottom line. So it's a constant grind every day to find people that can help you achieve more. you don't know how much more you can do until you meet people that did more than you. So my advice here is get out of your comfort zone and meet people that can do better things and bigger things than you did. And just by being around them, you will automatically become better.
Okay, that was, if you ever get out of medicine and get out of real estate and want to be a motivational speaker, you have my full support. That was amazing. I actually stopped writing notes because there was so much there. Something that I wanted to touch, and this is something that I've recently learned in the last few years. Something you said, you will never progress if you stay in your comfort zone. I love that. And that's very true, I think, for me as well. A few years ago, I went to grad school. I was very nervous to go, wasn't smart enough to go, and it changed my life. And really since then, I'm trying to get out of my comfort zone, because if I stayed in my comfort zone, I would not have gone to grad school. I would not have done real estate. I'd be working at a W-2 and still be in that E quadrant, right? That
Exactly.
quadrant. And so,
yes,
I think everything you said there was phenomenal. Something that I strive to do, and it's not hard for me, but I love to be the stupidest person in the room, because you get to learn from everyone else. You get to learn from Grant Cardone, Tony Robbins, Brad Sumrock, all these people that have done what you want to do, or can give you ideas on how to do something better and just get out of your comfort zone. So thank you for that. I definitely appreciate that. I know the listeners got a lot from that as well. I know we briefly talked about how you got into real estate. Rich Dad, Poor Dad kind of started that journey, the seminar, you took the next step there. But you also mentioned that you were in single family homes. And so I want to talk about that, because I know right now you're big time in apartments, but let's talk about single family. I'd love to understand what was attractive about single family, and then what made you transition to apartments?
Yeah, that's a very good question. Actually, that comes as an example to what we talked before, right? You don't know what you don't know. At that time, for me, starting in real estate and starting investing meant one house at a time. And it was a very good start. But again, you don't know what you don't know, and you don't know how much bigger can you get. And I got bigger and bigger by accumulating a lot of single family homes, until I realized that it's not only hard to manage them, but the numbers won't work that fast. If you have only a certain amount of years until you want to work, single family portfolios are very, very slowly accumulating wealth and cash flow. And if you have a tenant moving out of your one unit, that's 100% vacancy.
Yep.
And it takes a long time to get a tenant back in, a lot of effort, a lot of time, a lot of maintenance on single family homes. So I'm not saying it's a bad start. It's just the way, it's a step ladder, basically, and it's a step to progress to bigger things. When I realized that my portfolio was producing cash flow, but it was taking me a lot of time to work on it, comparing to what cash flow I'm getting, I start asking myself, let me get out of my comfort zone again and see what else can be done here. It has to be a better solution. And by going and meeting people that were doing better things than me, I realized that there is a scaling option here that can bring me to another level. And that's how I got into multifamily apartment buildings, where basically the effort and the time that you're putting in to get one of those, it's very comparable to what you're spending of getting a single family home. But you're not getting one unit, you're getting 100 or 200 units on that complex. And the vacancy when somebody moves out is not 100%. It's 2% or 1%. So you're scaling up your business at least 10 times. Not only on the cash flow, but on the reduction that you get on the time spent of managing those units, because you are getting in a team, which we call syndications, in a team of people that were leveraging each other efforts and knowledge and network. And at that time, you do your part, and you get 10 times over your effort. So, I'm not saying this is the end road or this is the best road to be in multifamily, but it's certainly better than being a single family homes. And it's certainly something that I'm looking to grow right now. And I'm sure there's better and bigger things than that I need to discover.
Okay. So are you still doing single family, or did you get out of that completely?
No, I got out of the single family business a little bit while ago, and sold my portfolio, and basically reroute the money into apartment complexes that I got over the past few years.
Okay. And you've been doing multifamily for about 4 years now?
Yes.
And you've gone from a few, maybe a couple dozen single family homes to now 5,000 stores.
Yes.
A little jump there, huh?
It's it's a jump. Again, it's a risk that you take. It's basically getting out of your comfort zone again, but it's a calculated risk. It's a calculated business. It's a much stable asset that you're getting into. Those apartment buildings are not something that are going to go away. They can be demolished. They can be, taken away. It's an asset that's real, and it stays there. And they're always going to be people who rent for live, and there are probably going to be a lot of people that are moving in those areas to be able to rent, because the job growth is there. So, in general, what you're looking at is, stable locations where you have a lot of influx of jobs and people moving in for that. And obviously, as I said, the occupancy, it's much better than in the single family domain.
Yeah, and something else that I like about apartments, there's a ton of benefits of investing in real estate in general, and you've touched on a few of the benefits of investing in apartments: economies of scale, vacancy. You also highlighted that there's a team involved. It's not one person. You're not owning 100 by yourself. There's a whole team involved. And some of those would focus on the business plan. Some of those are more analytical, focus on underwriting. Some of those may do kind of the project management, the asset management of the property, making sure everything gets done. So there's a big team involved. And I think something that many listeners may not be familiar with is the passive side of it. And I know that's how you started in apartments in 2019. Do you want to talk about maybe, I'll take a step back. Do you want to talk about what a syndication is, a multifamily syndication is, and then why you enjoyed being a passive investor so much?
Yes, it's a good start for your listener to understand that what we call a syndication is basically a group of people that are coming together in a format. In a business format that everybody puts in a certain amount of money, effort, and net worth to acquire a much bigger apartment multifamily complex of units that otherwise would be very hard to do by yourself. So imagine, a 10, 20, $30 million apartment complex that is acquired this way, with anywhere from 5 to 30 to 50 people in this kind of syndication, that everybody's getting the results of, the benefits of cash flow, appreciation, depreciation, and ultimately very big tax advantages. So it's a format that works because it is a scale format compared to you as an individual going and purchase a rental home that you can rent to one person or one family and gets, anywhere from $50 to $100 or $200 cash flow, positive cash flow a month, where you can talk about getting into a business like this, a syndication where you put maybe the same amount of money down payment like you would put for a single family home, but you get the rewards of getting a much bigger cash flow a month. And your effort of managing that is very little compared to a single family home. The second part of the question, how I started investing as a passive investor, was essential for me because you have to walk the walk. It was very helpful now that I'm doing my own deals and I'm an active general partner in them to know how it felt being a passive investor in other one's deals. And I have a lot of insights of, how my experience was with different deals. Some of them were very good. Some of them were not that good. They're still working, but there's so many things to follow as a passive investor when you go into a deal like this, on a syndication like this, because you have to look at different aspects of the deal, starting from, who are the people that you're associating with? Who is the group that's managing the deal? What is their involvement in the deal? If they have the necessary skin in the game, so to speak, to make the deal work well. Also, what is the location of the deal? How many people are participating? What is the track record of those people to deliver of what they're saying? So basically, it's ultimately a trust issue that you need to build with those sponsors in order to be sure your money is not lost at that time. So there are different aspects that we can talk about more in detail about basically a checklist as a passive investor to follow when you associate with a group like that. But once you have that under your skin, and I did a few passive deals with different groups, not all the same, because I want to have exposure to different types of management, different approaches, different personalities, different ways of communication, and kind of see where I am comfortable with going into this deal. So now that I'm doing my own active sponsoring of the deal, I know exactly what a passive investor wants from a sponsor. I know what I'm looking for because I know what they need, and I know what they want to be sure of. For some people, is their lifetime savings.
Yep. You
can play with these things. They want to put their money safe and they want to have a certain cash flow that they can live off of. That's one aspect. The other aspect is when you are an active general partner, and those groups that are sponsoring deals, they have a lot of responsibility, and not only for the investors that are participating in the deal, but also for the families that are in that apartment complex. You are taking basically over a multiple units with families. That's why it's called multifamily. The word family in that multifamily is very important. Those families, for them, is their home for many, many, many years, and you have to take care of them once you acquire the complex. So it's a lot of responsibility that those sponsoring groups have in terms of like how do they take care of the complex, what amenities they offer, how fast they respond to their needs, and ultimately everything that you take care of a tenant family will reflect in how you take care of your passive investors' families.
I love that. And I completely agree. I think for me, I always try to say it's a win-win-win, right? Our customers, I'm a syndicator myself, and our customers are our investors, but also the tenants. And so you can't do one thing for investors and it doesn't work for tenants and vice versa. And
Exactly.
so it's, we're in this big triangle where we all have to win, and it can be done. But if you're trying to screw over investors or tenants, it's not gonna work. And so I love that you say that, the tenants, I think, are just as important as the investors, because at the end of the day, it is their home, and maybe they only live there a year or two, but you want them to, like where they live and take care of it, take pride of, their community just as much as you do, because then that reflects in the overall returns to investors.
Absolutely. And think about this. When you have a tenant that is retained in your apartment complex over the years, because, the rent is good, the amenities are good and new and functional, the maintenance is very responsive to their needs. So all these things, if you retain your tenants, you automatically gonna retain your investors, because everything is gonna relate to your profits and your cash flow that you're gonna give to your passive investors. And everybody's happy. Like you said, it's a win-win-win situation. It's very hard for a lot of sponsoring teams to understand this, because they focus on smaller parts of the deal instead of getting the whole picture and the whole perspective that we are all in this together, from the sponsoring team to passive investors and to the tenants.
Agreed. Yes. Thank you. So I know you're still a practicing doctor, and you've made, over the last few years, I guess it's been longer than a few years, but in the last few years into real estate, you've really scaled up your business. What's your company looking to do over the next 3 to 5 years, in terms of apartments and real estate? What are your goals?
Yes, very good question. My company right now is focusing in growing their reach out to people that need to be educated about this kind of investments. As you know, the market is very turbulent right now. The interest rates are higher and higher. Stock market is the way it is, and everybody's praying that something is going to happen, not to lose all the money in stock market. Cryptocurrencies are somewhere near the bottom of the sea or the ocean at this point. There's a lot of money lost, as well as the other money made in this business with cryptocurrencies, but it's not a stable investment at this point. So I want to educate more people, especially people that are professionals, doctors, lawyers, that are willing to get into this type of investments, but they need more education. They need what they're getting into. They need to know exactly what to expect, what is the road ahead of them. And I think my goal right now is to educate a lot more people than I did before, and obviously to manage the investors database that I have right now, and also to take care of whatever deals I was able to put together in the past few years and make sure they are working really well for them. So for now, what I'm planning to do is to just create a strong educational foundation for investors that will attract them to understand this type of investment. There are going to be a lot of opportunities this year to get into this type of real estate investments. And I think over the years, it proved to be one of the most stable, profitable, and tax advantage investments that are out there. You can get a tax write-off by investing in the stock market, or cryptocurrencies or any other investments. This is the only way to accomplish a lot of goals in your financial picture.
I love the education piece because that's something I've been working on over the last 9 months or so as well. And I think for me, growing up in the United States, I was taught stock markets, right? Mutual funds, 401ks, IRAs, and that's okay. I'm not saying that's bad, but there's a lot of other investments out there that, you know, are not really as mainstream as the stock market. And something in the stock market, as a passive investor, I can put my money into the stock market. I can't control anything about that company. But with real estate, I can, right? We can make sure that the general partners are doing their job. You know, as a passive investor, we're not talking to tenants, we're not talking to property management companies, but we can vet the general partnership team beforehand. You know, if you invest with as a passive investor, you mentioned this earlier, but you want to know, like, and trust the general partnership team. And so I think for me, education is key. And a lot of people I talk to don't know about multifamily syndication. They think, I don't want to invest in real estate. I don't want to be a landlord. I don't want to get calls at 12 midnight and don't want to change toilets, anything like that. I've been a landlord myself. I hated it. Had phenomenal tenants, thank God. Otherwise I would have never been in real estate. They were great tenants, but I would get calls at different times, and I'm like, I'm hanging out with my family. I'm not going to be there till tomorrow unless it's an emergency. And so I think I'm in that same boat as you. Of education is key. And something else you mentioned, you're talking to lawyers, doctors, etc. What do you think makes real estate so attractive to maybe someone in your shoes, maybe one of your colleagues, maybe another lawyer, another doctor, engineer? What makes real estate so attractive to you or to them?
Yes, that's a great question. We all know that those kind of professionals that I mentioned are usually very high income, net worth individuals that not only they earn a lot, but they pay a lot in taxes too.
Yeah.
And this is one investment probably out of all of them that could provide some tax benefits for them. So this could be very attractive for someone like that, because not only they can offset some of their passive income from other places by taking depreciation and bonus depreciation, or even more, depending on their financial situation, they can take a lot more advantages and deductions from those investments, depending on what the financial family situation is, or employment, or if the wife or spouse or their partner can work in real estate or be a real estate professional. It can be a lot more tax advantages from that. So I think for most of them, this particular aspect can be a very important reason to get into this type of deals.
Awesome. I love that. There's a ton of benefits with real estate, a ton with multifamily. You hit on the tax benefit side. There's depreciation and bonus depreciation. We're not going to get into that, but that's just kind of depreciation on steroids, and really expedites the depreciation over the first few years as opposed to the length of the property.
Yeah.
But that's another show, not now. Is there anything else maybe about your current profession that's helped you in real estate?
Oh, definitely. Definitely. As I mentioned before, I was an employee initially, then I started my own company and evolved as a business owner from that point. And I think the experience that you have running your own business and managing your own people and getting a lot of situations that you need to deal with in terms of like personalities and business opportunities and the way you handle stressful situations and rejection most of the time in your business endeavors. I think everything counts and everything makes you a better person in terms of how you deal with a complex, an apartment complex acquisition like this. It's basically a business in itself. You have to run it as a business with your passive investors and your tenants in mind. So it's a lot of responsibility. Then that responsibility comes from an experience that you accumulate, in my case, of being a business owner for, almost 20 something years now, and deal with this kind of situations. So definitely it's an advantage, so to speak. But again, you have to get out of the comfort zone to start doing this. Otherwise, it's very hard to jump from being, let's say, an employee for someone or a company and want to run in a real estate acquisition business like that, because it takes a lot of experience in dealing with this type of situations before you do that.
Awesome. That's great. As we approach the closing of the show, wanted to ask about I know we've talked about Rich Dad, Poor Dad some, but let's talk about a recent book maybe that you've read that stands out, real estate related, business, self-help, anything like that. What stands out that you've recently read?
There are a lot of things that stand out. I'm very big in personal development, and the way I manage my time is mostly trying to listen to or read books that can help me progress my mind in a better way, because it all comes from your mindset. Immigrating in the United States was a mindset change for me, right? That's how I started. So from that point on, I try to change my mindset and upgrade my brain hard drive with this books and audiobooks as much as I can. To answer your question, I think one of the last ones that I really loved was called Who, Not How. It's a definite read for your listeners, and I think it's going to change your mindset of not only what you're doing in your life, but who you're hanging out with. Because it's very important, it's a people business, right? Life is a people business. So you need to know who you hang out with, who your friends are, who your influencers are, and mentors are. So the more you know that, the better it's gonna be for you. And the more it's gonna change your mindset to think differently. Once you think differently, you'll do differently. And once you do differently, you'll earn differently. And once you earn differently, you'll have plenty of happiness in your life.
There you go again with the motivational speaker. I love that. And I love the book, Who, Not How. It's a phenomenal book. All right. So and I know we touched on this a little bit earlier, but what can people expect to see from you and your business over the next few years, besides education?
I hope to ramp up my acquisitions this year and then years to come. So hopefully we can screen the better deals that are out there, and we always grind them in underwriting and make sure, they're solid deals producing good cash flow and appreciation. So I would expect to do, maybe 1, 2, or 3 deals a year, hopefully from now on, and take advantage of the opportunities that are this year, especially. Awesome. And from that point on, increase the portfolio, basically try to accumulate a lot of assets that are cash flow producing assets to deliver to our passive investors. That's the ultimate goal, and improve the communities where we acquire those properties. Because if you improve your community, you're going to get a name for yourself as an owner. And you're going to see that property appreciate over the years. And then ultimately it's going to reflect, as I said, into how your passive investors are getting those results back with their money.
If I am a fellow doctor, which I'm not, I'm far from, but if I'm a fellow doctor and want to passively invest with you, or I just want to talk to you, what's the best way to reach out to you?
I'm happy to talk to anybody interested in this. As I said, I'm planning to educate everybody in this field. They can go to my website. It's an ever-growing website, and I always updated it because things are changing and times are changing. The website is stellarmultifamily.com.
Okay.
You can contact me there by email, or I'm on social media, on Instagram, Stellar Multifamily. I'm on Facebook, on LinkedIn. So there are plenty of ways to reach out to me if you really want to talk. I'll be happy to accommodate everything.
Awesome. And I know you're very active on LinkedIn, and so I'll put all those handles in the show notes. Dr. Francu, thank you so much for being on the show. It was an honor to speak with you, talk to you again. I know the listeners got a lot from it.
Absolutely. I appreciate it, Charlie. Thank you very much. And I hope your listeners will benefit a lot from this.
Thank you. Have a good day.
You too. Bye-bye.
Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.